Notice where it closed in relationship to the prior low. That's the last time the market made a lower closing low. So what I would do at this point in time is I'd be looking to capture a portion of profits on my position, and I would place a stop above that high and let it ride. Now I'm going to be sitting in this trade for an awful long time because I'm not going to get stopped out to about right here or here, okay? But I can definitely say that as we're close to support, as we're close to these supports, these are the support targets as I'm showing you. As we're close to these supports, I can make a determination whether I want to stay with the trade, cut the entire position out, and walk away a winner. That's how you look for a trade signal. That's how you enter the sell signal. That's how you get on the market. That's how you place your risk, and that's how you manage your trade. And that's what a professional does to take money out of the market each and every day. And so if that doesn't seem that hard for you to do, then welcome aboard, because I think this is going to be probably the best way that you're going to capture short-term trades. As a Forex trader, just by the very nature of the fact that you're trading foreign currency markets, you are a short-term trader. You're not looking to determine and be right or become an economist as to where the euro currency is going. You're looking to add money in your account, and you're looking to do so with a certain degree of risk, with the expectations of being rewarded if you're right. That's how you manage a trade. Now, we've gone through some of my signature phrase patterns. I want to show you some top reversal patterns, some that have a lot of relevancy. We've listed them in your trading course book. However, let's go over a few. Remember, we talked about the evening doji star. However, the evening doji star has about 12 variations. It's really easy to see the doji. It's really easy to see the market close below the doji low. That's what I'm targeting. That's what I'm focusing on. In the examples that we showed, both low close doji and high close doji, we never did see an official evening doji star pattern. And when we were at pivot support, we never really saw the official morning doji star pattern, did we? So therefore, if you're focusing on those two patterns, if you studied, if you got the rule book out, if you look at the chart patterns, you're going to have a hard time identifying those, and you're going to see a lot of different trading opportunities pass you by. By the way, we have the Harami doji cross. Again, very important. It's a bearish sign when the market, after a rally, as this is a white candle, after a long rally, and we see a doji within the real body, this market is indicating a change in the momentum. It's a very ominous sign. But again, I need to see more evidence as to determine whether the market is going to truly go down, whether this is just a sideways or a pause, if the market's going to resume the uptrend. So therefore, when I see dojis, I need to see where the market closes in relationship to its low or in relationship to its high. There's, of course, the bearish engulfing pattern. There's the dark cloud pattern. There's the bullish engulfing pattern. Both the engulfing patterns also resemble what we're going to go over in this course is the benchmark, which is a little bit more powerful. And I gave you already an introduction to the benchmark and how to handle that trade. In a bullish engulfing pattern or a benchmark or Marabuzzo, we're looking to buy the midpoint of a pullback of that candle. In this whole scheme that we're seeing, these are the most important patterns that we look for, but I'm teaching you some of the more important variations. Two patterns that we want to introduce you to. One is called the hammer, which is right here, and the inversion of that hammer, and that would be if the real body would be at the bottom and we'd have a very tall spike top, we would be calling that a shooting star. Very important between the hammer and the shooting star. Hammers are a characteristic that form at bottoms. They are just as powerful as identifying reversals as dojis, by the way. And so therefore, I think it's important to give a lot of respect to the hammer and talk about it in this course. First off, the characteristics required to form a hammer candlestick is that the lower shadow should be at least 2 times the length of the real body. There should be little to no upper shadow. Now with Forex, it's very difficult on this because of the bid and the ask. There may be a shadow, but depending on your Forex platform, or at least the Forex dealer that you go through, because of the, within Forex, sometimes there's a 3 pip, 2 pip, 4 pip spread, and the bid and the ask, that candle pattern might not show up on one platform where it will on other companies' platforms. So you have to have a little bit of gray matter there in some of these patterns. And that's why I like the 15-minute time period, because in 15 minutes, it's really not something that's going to be